morning, ladies and gentlemen. This is Butch Shorak, Options University. Monday, October 15th, 2012. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We are not a service that tells you what to trade. We're not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. And with that, let's take a look at this past week and see exactly what happened to us during this week. Key things that took place on the economic front, jobless claims. They looked a lot better than what they actually were, as a big state, mainly California, failed to turn in its numbers on unemployment. So we really didn't get a decent number as to what unemployment was this past week. As that news broke, the market did pull back, and we saw that for the week the S&P lost ground as the correction for the week continued. On Friday, the PPI, the consumer sentiment, and the consumer sentiment from the University of Michigan registered reading of 83.1. This is the survey's best level since September of 2007. And this lifted the margins, the major averages, to their session highs, and then began to tail off as the day went on. Let's take a look and see what it is we're looking at for next week as far as economic announcements. And looking at next week, we see that on Monday we're loaded before the market opens. We're looking at retail sales. We're looking at Empire State. Business inventories come in at 10 o'clock. So Monday's a day loaded with information on this second week in October. Then we're going to look at CPI before the market opens on Tuesday. And housing market index at 10 o'clock on Tuesday. Housing starts on Wednesday, and then we get to Thursday with our normal every single Thursday morning jobless claims on the week before. We'll see if all the states decide to report this week or not. Philly Fed survey coming in at 10 o'clock. Economic leading indicators for the entire month of September will be reported, and then finally we'll have existing home sales coming out on Friday, as we have a week loaded with all kinds of information. Not only that, next week earnings season enters full force as more than 230 companies are scheduled to report their third quarter results. And so we'll see what effect this will have in the market, as we've had our pullback prior to these announcements. These announcements will affect the overall market. Now looking at the SPX for the last week, we see that we are no longer in an uptrend. We've spent some time below that 30-day moving average. There's the 30-day moving average there. Spending time below it, actually the diagonal that I had drawn in and has been drawn in for quite some time ended up as the holding position for the market as we enter into this big week of earnings. And basically, if earnings have any kind of results whatsoever, we may see a bounce take place as we continue to trade in this zone. But notice that we've traded below the 30-day moving average, so we've changed our trend from an uptrend to a sideways trend. Once we start trading below the 30-day moving average, the trend changes and we're in a sideways trend. If we don't get the kind of news that we can expect this market to pull back to around 1405. So watch that first hour of the morning and see where it's going, giving you an indication of what the market's doing and what it's feeling. Currently, the market, we're at Sunday night. The futures are looking a bit flat as we look at the overall market. Now, let's go ahead and take a look at the week with a little more detail. Friday's session got off to a kind of a quiet start there, and the major averages held near their opening levels until we got the consumer sentiment. Then we got a bounce, and then it tailed off for the rest of the day, as the key indices promptly fell through the unchanged to the session lows, but notice did not close at the session lows, and our diagonal line acted as a good level of support. Watch Monday carefully, as we may see whether we go and continue on down. Remember, the most important price of the day is the closing price. So we settled for the day with a 0.3% loss, with the S&P down roughly $4.25. This was with the fact that J.P. Morgan beat estimates, beat revenues, looked great, and Wells Fargo, they looked great, but it just couldn't pull the market up, as we saw that the XLF, that is our, which we'll look at in a little while, our financial ETF, was down for the day, as we're looking a bit labor on the financials sector of the market. Bank of America, Morgan Stanley also pulled back radically, as Bank of America was down 2.4%, Morgan Stanley down 3.1%, and we'll see what happens, whether we're going to get our bounce. But remember, you never have sustained market rallies without the financial sector contributing to that. So the SPX pulled back a bit on Friday and for the week. Then we notice, look at, here we are sitting right there at that 50-day moving average with the Dow, as the Dow pulled back for the week also. But notice that on Friday it was up 246 for the day, up 0.02%, basically flat, if that's what you want to call it, with the 50-day moving average holding for the Dow. Next, let's take a look at the NASDAQ. See that we have dropped well below the 50-day moving average. No sign here of a higher high and a higher low on Friday, as we got a lower high, lower low, and we're in a down cycle in what is now a sideways trending market, and we'll see where the NASDAQ leads us as we go forward. Down 5.3% for the day, kind of an ugly day for the NASDAQ, and headed for that very, very strong 3,000 level. We'll see whether we end up down there. We will certainly hit that if the market continues to pull back. Looking at the Russell, we see that the Russell did break through the 50-day moving average, actually closed below the 50-day moving average at 823, down 6.69 for the day, down 0.81% for the day. So we see that it also is in a bit of what looks like a downtrend, as we're spending time above and below and breaking below that 50-day moving average. Well, remember, you get more action out of the Russell, as it tends to have a higher beta than the S&P and the Dow. Next, let's take a look at the overall week, looking at the different averages, looking at the Dow, NASDAQ, S&P. We see all negative numbers for the week as we look at the change, and we see that we are no longer in double figures for the Dow, up 9% for the year, NASDAQ up 16% for the year, S&P up 13% for the year, Russell up 11% for the year, with all of them down anywhere from 2 to 2.9% for the week, as we continued with that pullback. Of course, when the market pulls back, what do we expect the VIX to do? Let's see if it did it. We expect the VIX to go up a little bit. It did, but looking at a 6-month chart, you see that we are still in a very low level for the VIX, as we have this bit of a pullback. It's still well into the lower part of its normal range. Looking a little more carefully at a 3-month, we see that there's been a little bit of volatility here, as the market has been going through some gyrations between this 17 level and this 13 level. Very low levels for the VIX, and it has been represented by the amount of premium in our options. So let's take a look and see what some of the sectors in the market did last week. Looking at the bond market, we'll look at TLT, and we'll look at it was up for the day, up a little, and we see that we finally broke above that diagonal line that we have there. But look at that candlestick. Potential for that candlestick to be a reversal candlestick. Watch for a higher high or a lower low on Monday, as we see the bond market did finally break above that current downtrend that it was in. All right, next let's take a look at another sector. We'll take a look at the financials, which we said had what a bit of a miserable day, down 0.22 or down 1.37% as it led the market down, sitting still at that 30-day moving average, so still in an uptrend for the financials. And we'll see what happens and whether the financials will have earnings to keep the overall market heading up. Then let's take a look at oil and see what oil did. We'll look at the oil sector. Oh, we've got a wrong chart there. But oil pulled, actually we're going to not talk about oil since I don't have the chart up there. But gasoline prices soared to over $5 in Southern California as refinery issues can't keep up with the demand. So we're going to take a look at oil on when we look at our next chart on Friday. Next, taking a look at gold, we see that gold was up down minus 1% or minus 1 point or minus 0.74% as we pulled off those previous highs, still sitting at that 30-day moving average. We'll see if that acts as a bounce point for us, and we certainly have some support at 170. We'll see what happens with gold as it is a bit of a safe haven for us. And then finally, let's take a look and see what kind of volume we had on Friday, and we see that we were basically at about average volume as we pulled back to that 50-day moving average on the SPY, and we'll see that it was down 0.33%. So the spider followed the SPX as we expected, bounced below that current sideways trend we were in, but hit that 50-day moving average and closed right in on that yellow zone that you see marked on that chart. So that's kind of the market as it was during this last week. Let's take a look at our stocks to watch. For those of you that are gold members, for those of you that are not, would like to see more free videos, go to www.optionsuniversity.com/free gold. And so with that, this is the week that was, and we'll take a look at the week that is to come as we look at some of our favorite stocks. This is Butch Shorak, Options University Market Forecast, Monday, October 15th, 2012.